so let's do exercise 4-7. Every time I start again, I gotta start again. All right, let's do exercise 4-7, okay, on page 199. Let's give this a shot. So this is all that deferral and accrual stuff, adjusting books, okay, to get your balances for your financial statements is all we're doing. So an adjusting journal entry is just adjusting the account from where it is to where you want it to be. So what's the process? Figure out where you're at, right? What's the balance now in the account that you're going to work with, okay? Then figure out what you'd like the balance to be, right? That's the hard part, probably, okay? And then what? Make an adjustment to take it from where it is to where you want it to be. That's it, okay? These are really simple. The other thing besides doing 4-6 is we will do 4-8, which is determine the impact of this. So we'll do them at the same time. So what's the impact of each one of these journal entries, okay? On the quiz and on the test, I love these questions where I have you do an adjusting journal entry, and then I ask you what's the impact of that adjusting journal entry on the balance sheet and the income statement, and then I'll ask you, what if you fail to make the adjustment? What's the impact on the balance sheet and income statement? If you can make the adjusting journal entry, those other two questions, what's the impact on the statements, what increased and what decreased, and what would be wrong if you don't do it, what's overstated and understated, those are a piece of cake if you know how to make the journal entry. The hard thing is doing the journal entry, and even the journal entry is easy, because you guys understand how debits and credits work, don't you? Right? You know how they work, 5 accounts, and debits and credits, increasing and decreasing, left, right? You guys know this stuff now, okay? So the entry is going to be easy. What's going to be hard? Understanding the business transaction. When you read one of these problems, they're real short. Each section is real short. Read it carefully, figure out what it means, and write that down, and you got to make it. The adjusting entry almost just falls out for you. Okay, so here we go. Let's do 4-7, part A, okay? By the way, this is a boat yard, repairs, stores, and cleans boats for customers. We're on page 199, so we just got here. And they're completing the accounting process, just ended, okay? And their year end is when? November 30th. Not December 31st, it's November 30th, isn't it? So be careful, they do their financial statements November 30th for their annual statements. That's when they'll be closing their books and starting over after they do their statements. All right, in A, John winterized, cleaned, and covered 3 boats for customers at the end of November, but did not record the service, and it's for $3,300. So what should you do if you fail to record that? Well, you haven't done it. You cleaned them and covered them. Why do you clean and cover boats? That's how you do what? There are assets, liabilities, equity, revenue, and expense. That's how you do what? That's how you earn your revenue. Okay? Really, we will do calisthenics, you guys. You're not awake. It'll be okay. Yeah. Well, I won't do well. Good. Nah. What was it? That's how you generate your revenues. That's what they do. You generate their revenues to become wealthier, right? To make their net income. Okay, so do you think they've earned the revenue if they clean the boats and cover them up? Yeah, how much revenue have they earned? 3,300, is that what it was? Okay, so what would you want to do? Probably record the revenue so it gets on the income statement, right? And what does that mean? Debit or credit revenue? Right here, debit out there? Credit, right? It's credit revenue. Okay, here we go. The other class did this to me. I just erased that, you guys, and asked you not to make me do it again, and you just did, right? A few of you are mumbling, I increased revenues with a debit. No, you don't. No. Don't do that. Assets equal liabilities plus equity, right, guys? Revenues less expenses is net income. You should be sick of me writing this down by now. About half of you are. The other half don't quite have it yet. Get it down. Repetition pays off. Repeat yourself, too. Keep using this. Okay, what does left mean? What does right mean? Of course. Okay, assets are on the left, so you increase them with what? You reduce them with what? Liabilities and equity on the right, so you increase them with? You reduce them with debit. Everybody's good through that point, huh? And somehow our brains fry when we get here, huh? over the income statement. The revenues and the expenses, they are not on the right-hand side. They're what? A subset of equity. So it works exactly the same as equity, right guys? As you increase revenues, what's happening to your wealth, your equity? It's going up. So how would you reflect more equity? Credit. So revenues must be what? Credits. They've got to be credits, you guys. If you put too much in one, what would you do? Reduce it with a debit. Excellent. Okay. Expenses. They got to be the opposite of revenues, because we don't remember what to add and subtract anymore. We take the difference between revenues and, we take the difference between debits and credits, right? That's it. Okay? Yeah, we are going to take the difference between revenues and expenses, but these are credits. And what are the expenses going to be? They're going to be increased with debits. What's the other reason, the real reason expenses have to be debits? What do expenses do to your wealth? They decrease your net income, reduces your retained earnings, right? Reduces your wealth. Everybody got it? This is how we think about this. So you increase the expenses with debits. If you put too much in, what would you do? Credit the expense. Okay, now tell me, is net income a debit or a credit? It's a credit. Why? Because it's increasing your wealth. Yeah, it's increasing retained earnings. That's true. Okay? What else? These revenues are bigger, yeah, higher number than these expenses. Right? That's it. It's a net credit. You know, a bigger credit, less a smaller debit. Guess what? Okay, what would a net loss be, everybody? It's got to be a debit. Why? Expenses are more than revenues. It's a net debit. Also, what does a debit do to retained earnings for that equity account? Lowers it. Okay, so when I said, how do you increase revenues, what should you unanimously think? It's a credit, of course, with an increasing equity, right? Absolutely. What do you want to name this revenue, seeing as it's winterizing boats? I'm providing them a service. What do you want to do? Some sort of service revenue. Maybe winterizing service revenue. You like that? Is it a debit or a credit? Don't make me do it again. It's credit, yeah. We won't ever get through anything. Okay. If they paid me, what would I debit? Cash. If they had paid me last month, what would I have done last month? Debit cash and credit unearned revenue. And now what would I do here? Debit unearned revenue, right? And credit revenue. But they haven't paid me at all. What do I want to do? And they're not paying me now either. You know what it says? They're going to pay me later, right? What do you want to debit? Accounts receivable, which is a what? Asset, and a debit makes it go higher, right? There's your adjusting journal entry, guys. That's called an adjusting journal entry. We are adjusting the account from where it is to where we want it to be, huh? I want those receivables recorded. They're not. Debited. I want that revenue recorded. It's not. Credited. Okay, now, what's the impact on the balance sheet and the income statement? Oh, by the way, first, is that an accrual or deferral of the revenue? Defer doesn't mean the cash. Defer means the revenue, right? If I'm deferring something, right? Okay. Accrue doesn't mean the cash. Accrue means the revenue, right? So what did I do? Did I accrue revenue or defer it? Did I speed up recording the revenue or did I slow it down? I accrued it. This is an accrual of revenue. How is it an accrual, guys? I accrued the revenue because I'm going to get paid later, right? I accrued the revenue now, and I'm going to receive the cash in a later month. Okay? What do I do when they give me the cash? Debit cash and credit what? Accounts receivable, because you don't have it anymore, right? The receivable would be gone then, wouldn't it? Debit cash because it came in, credit accounts receivable. Come on, you guys. All right. Here we go. Tell me what impact that adjusting journal entry is going to have on the balance sheet and income statement. What do you think a debit or accounts receivable does to the balance sheet or income statement? Increases assets. How do you know that? You debited an asset. You have to know that. You can't make the entry, huh? So you're going to get these right. I'm giving you answers on the quizzes and tests here, you guys. Get interested. I know you all care about your grade. I know it's, what time is it? 1 o'clock? Right? It's horrible to have a class at 1 o'clock, especially when you have to walk across here and it's still beautiful weather. It'll be a little better when it's cold. No, and then you'll be freezing. Okay? But you got to get hopped up, you guys. Come on. Right? Didn't bring any caffeine with you? Again? I'm gonna have to coffee beans and pass them out to you people. You ever chomp into a chocolate covered coffee bean? They used to sell those. They still do sell them. Or, oh my God, the top of your head comes off. But anyway, yeah, they'll have to pass them out to you guys. Eyes will open up. Okay, anyway, debit accounts receivable would increase assets. What would credit service revenue do? Increase revenue. What does that do? Increases net income. What does that do? Increase in equity account. Which one? Retained earnings. Good. What would happen to liabilities here? Seeing as there's absolutely no journal entry affecting liabilities in there. There's no account affecting liabilities. No liability account in our journal entry. What do you think? Nothing, right? How about expenses? There's no expense in there. Nothing. Okay, if I fail to record it, so those are answers. I'm going to give you credit for that, huh? If you know how to make the journal entry, could you possibly miss that? I don't think so. So I get to make fun of you if you do, right? Okay. How about what would be wrong with the balance sheet and income statement if I fail to make the entry? So in the problem, I'm going to say, if I fail to make this entry, this adjusting journal entry, what would be the impact of it? What if I fail to make it? Assets need to be increased. What if you fail to do that? I bet they'd be what? Too low. We'd say understated. Liabilities, I should do nothing to them. So what's wrong with them now? How about nothing? Okay? No effect. No effect on it. How about equity? Should be higher. What's wrong with it if I don't do it? Understated. Why'd that happen? Revenues need to be higher. So if I don't make them higher, what's wrong? Understated. Expenses, nothing's wrong. So guess what? Nothing's wrong. No effect. Everybody got it? And net income needs to be higher. What's wrong with it if you don't make it higher? It's understated, which of course, that's what causes the equity to be understated, right? Because net income's understated. Is this easy? Yeah. What's the hardest part? Figuring out what the journal entry is. The rest of it's just doing it, right? Practice a little bit. Okay, gang. Somebody do B for us. Read it off. You guys are much better than the other class. I see lots of books out there. A whole bunch of them didn't bother bringing a book. It's too heavy. Okay. Anyway. I don't always go through problems in the book, do I? It might be the first time. I do once in a while. And I'm going to when we next time, right? Okay. You want to do one? Just, oh, come on, just read it. You don't have to actually work it. We're going to all work it. You can read it.
October 11, 2015, John paid $2,200 to the local newspaper for an advertisement to run every Thursday for 12 weeks. All ads have been run except for 3 Thursdays in December to complete the 12-week contract.
Okay. So they paid for 12 weeks on October 1st, and they've used all but, well, how many was it? 3. So I guess they've used 9 out of 12? 3/4 of it? Is that what that is? And did not use 3 out of 12? 1/4 of it? Okay. When you have a problem like this, I think it's kind of nice to use T accounts. You don't have to, but I think T accounts are really helpful here because you can see exactly where you're at. Now remember I said to do an adjusting entry, you want to find out where you are, find out where you want to be, and then just make the adjustment. Sound good? If you know where you're at and you know where you want to be, the adjustment's easy. Just adjust the account from where it is to where you want it to be. Which accounts are we working with here? Okay, how did they say they recorded it in the first place? They paid for it. It's going to be an expense. How did they record it, though? They paid it, right? Oh, they don't even say, do they? Oh. Little problem with this one. They paid it, though. What did they pay it with? Cash. So it's debit, or credit cash, rather, right? Less cash. Everybody agree? There are 2 possibilities how they could debit this. I hear expense. That'd be all right. One way would be debit what? What's it all going to be by the time we run all the ads? What's it all going to become? Why do you run ads? To generate more revenue. It's a cost of generating revenue. Really bad it makes it. An expense. What would be a good name for the expense? Advertising expense, absolutely. Okay, so what we could do is we could debit advertising expense. We're going to do this one two ways. I hate to do it this early on you, but that's okay. It's going to make sense. Okay, they don't tell us what they debited, do they? In almost all these problems they do. Okay? But let's say that they had said they go to an expense account, which is also a nominal account, temporary account, right? They're nominal and temporary because you can close them. You guys know about that now, right? Closing entries. Okay? So advertising expense, if it said it went to a nominal account or an expense account, temporary account, that's what it would have been, right? It's going to be advertising expense anyway, someday, right? So it's okay to go to that account. What's the other possibility? Seeing as I paid this in advance, what account could it have gone to? You bought the ads in advance, you guys. An asset name. Prepaid advertising. Yeah, it could be prepaid advertising. And we will do it that way as soon as we're done with this way, okay? We're going to do it both ways. Should be great. Okay? So let's assume that what they did was they debited advertising expense. You like it? So what I have in advertising expenses, how much? 2,200 relating to this, right? And what do I have in prepaid advertising relating to this one if I put nothing in it? Nothing, right? What date was, or we don't care about the date this time, we care about how much we used up, huh? I take it back. Okay, so how much have we used up of that 2,200? You said 9 out of the 12, right? So 3/4 of it we've used up? So what's 3/4 of 2,200? How much? 1,650. So just 2,200, right, times 3/4. That's the portion we've used up, which is 1,650. What have we not used up, of course? The rest, right, which would be 1/4 of it. How much is that? 550. Everybody agree? So that's what we're working with. Now tell me this. Which one is the expense, advertising expense, and which one is prepaid advertising at the end of the period? 1,650 is the expense because that's the amount that you have used up. You got it. Why is the 550 prepaid? Because you haven't used it yet, right? It's a benefit I get in the future. Everybody got it? So which account did we say we want to be 1,650? Advertising expense, right? And November 30th, that's what I want in that account. Everybody agree? What do I want to have in prepaid? 550, absolutely. Okay, now see what I mean? If you know where you're at, 2,200 and 0, and you know where you want to be, that's the hard part, 1,650 and 550, is this journal entry easy or what? How are you going to get from 2,200 down to 1,650? Anybody have an idea how to get from there to there? You know, a debit of 2,200 down to a debit of 1,650, come on. What do you do? Credit 550, absolutely. Okay. It's just the personality of this class. You guys just like to watch me try to get you to say something. You refuse. Okay, credit advertising expense. You like it? Because I want the advertising expense to be 550 less, so I made it less with a credit. What do I want to debit? Yeah, it's 0. I'd like it to be 550. Debit it for how much? 550. Looks really good, doesn't it? And we got it made, guys. Everybody good? Okay. Is that a deferral or an accrual? Actually, I'm deferring recognizing that expense until later, aren't I? By putting it into a prepaid. Yeah. Sure am. Okay. All right. How about if instead, let's do an instead here. Instead of going to this income statement account, nominal or temporary account, let's say they went to a permanent account, or a real account we call them. Balance sheet accounts, we don't quote them, so we call them permanent. Makes sense? What balance sheet account would they have gone to when they originally reported this thing? Probably prepaid advertising, because that's what it is. Everybody agree with that? By the way, neither one of these is right or wrong. They both work just fine. So if I went to instead of an income statement account, I went to a balance sheet account, or a real account, permanent account, what would I debit? I'd still credit cash. Still credit cash for 2,200. What would I debit, though? I went to a balance sheet account. What balance sheet account? What did I buy? Prepaid advertising, right? I bought advertising that I'm going to use in the future. So at that date, when I bought it, what would it be? Debit prepaid advertising. Everybody agree? That could have happened. So I've got 2,200 in here now, and I've got nothing in here. Everybody see it? Ah, but where do I want to be at the end, at November 30th, the year end for this company? How much of that have I used up? 1,650. How much have I not used up? 550. Which account would I like to be 1,650? The expense. Which account would I like to be 550? Prepaid advertising. The prepaid, the asset. Right, guys? You do know that 550 and 1,650 adds up to 2,200, right? We're good, doesn't it? Okay, the account's got 2,200 in it. I really wish that it only had 550. Anybody got an idea for an adjusting journal entry? Credit what? Prepaid? I like it. Credit that one, 1,650. Prepaid advertising goes down, 1,650. Everybody good? And debit? Better put 1,650 in here and take it up from 0 to 1,650. Advertising expense. Could you do this? Sure. A little bit of practice. Yes.
So it's not backwards, but why would you do that? Like, what would be the reason to do it the second way instead of the first way?
It really doesn't matter which way you do it. So if your bookkeeper was trained or your computer's programmed to do it one way or the other, it's just fine.
Okay.
If you have two different bookkeepers and one wants to do it one way and one wants to do it the other way, fine. At the end of the accounting period, you figure out what the balance should be in the accounts and you adjust from where you are to where you want to be. Different companies do it different ways. Okay, and later we'll have more reason for that. Okay, you might want to do it one way or the other. Deals with reversing interest. You gonna take 211? Your finance or accounting maybe? Yeah, we'll do it 211. Yeah. Why? You might do it one way or the other. But the point here is, it doesn't make any difference, right? What really matters to me, that I have the right balance on the balance sheet and the right balance in the income statement when I do statements. That's all I care. Now, I don't want them to debit land with it, right? Because when they debit land, they have to take it all out of land. I want them to go to either advertising expense or prepaid advertising, because some of it's going to be prepaid advertising and some advertising expense at the end of the year. If I was going to use it all up before the end of the year, I'd put it all in advertising expense. If I were to use none of it up before the end of the year, I'd put it all in prepaid, wouldn't you? Right? So I don't have to make any adjustments between them. Okay? So great question. That's a really good question. Okay, everybody got it? So let's do this on the balance sheet then. Let's figure out what this would look like on the balance sheet for each of these. What would this one be? Let me give myself a little more room here. Get rid of that. Okay, so let's do this one up here. What's the impact of that adjusting journal entry if they've done this approach, right, with debiting the advertising expense first? What's the effect on the balance sheet? And then income statement. What do you think? Let's see, debit prepaid advertising, 550. What would that do? Increases what? Assets. That's it, 550. What would credit advertising expense do? Decrease equity. Is that right? I think it's decrease expense. It's an expense account. What does that do to net income? It increases it, which does what to equity? Increases equity. Reducing an expense will increase equity, right, guys? And by the way, you'll catch yourself on that if you set it up like this, because you'd have increased assets and reduce equity and say, no, it's got to be the same on both sides, right? So it'll stop you from making that mistake. Everybody got it? Okay, kind of nice little system. All right, guys? Okay, all by 550. So what would be wrong if you didn't report it? Assets would need to be higher. What would be wrong with them? Understated, everybody agree? Equity needs to be higher, it would be understated. Liabilities would be fine, right? No effect. Revenues, no effect, there's no entry to it. Expenses need to be lower, they would be overstated. Net income needs to be higher, it would be understated. Everybody sees all the relationships. Now, here's the deal, you guys. You did really good on the first quiz. Is the second quiz going to be harder? Well, yeah, the material's much harder. It is, isn't it? You're trying to do it. Are you working just as hard as you were on the first? Don't let up. Are your other classes actually having to read stuff now? You know, you're having to think and work and stuff? So you're backing off on this one? Don't do that. Just work harder in everything. Welcome to Down. Sucks. Who's been here for more than a year? Sucks, doesn't it? You've got to learn too damn much. You think? It's kind of what it is. You get more than your money's worth, which is terrible. You know, terrible job. Be more prepared when you come competitive stuff. But in the meantime, yeah, it's awful. But don't let up. Okay? In my intermediate class, it's a group of really bright kids, I think. I give them a 25-point quiz, and there are a third of them have 8 or less points. A whole bunch of them have 2. I guess they're changing the major somehow. I don't know. Unbelievable. I hope not. I hope they start working. It can happen to me anytime, you guys. By the way, there are 2 people out of 27 that have 24 points. They're going to be CPAs. And Deborah Reddick. Boom. One of them's a certificate student who just came back. Was doing the accounting program. I don't know, she's in her 30s maybe or something. Maybe low 40s. She's going for it. Oh. And another one is 19 years old. The other one's 24. There you go. And then classes everywhere in between. You can deliver whatever you want for yourself, you guys. You're not doing it for me. I'm not going to remember you. I'm sorry. I know sort of vaguely, right? I'm certainly not going to remember what your grade was. I'm going to be pleased for you if you're a successful person. I'm going to really like it. But who's going to really reap the reward or whichever reward it is for you guys? You. Come on. Okay? Anyway, and it's okay with me if you come in here every day and you don't answer any of my questions, because it doesn't matter, I'll tell you what the answer is anyway. But if you're not mentally answering them while I'm doing them, you're doing yourself in, because there's somebody else sitting here that is. Got it? Okay. Are you getting every single one of these? Do you know every single one as I go? Got it. Keeps wasting my time every day when I come in here. That's where you want to be, okay? And if you're not, what should you do? Pay attention, show up for review sessions, get help in the art, give me a call, we'll get together and work on some stuff, right? Make sure you've got this stuff, okay? When is our test? Next Wednesday. Quiz Friday, test next Wednesday. What portion of your grade will be established right now? 160 points out of 650, whatever percent that is. It's a chunk, isn't it? Okay? Don't wait. Don't do that to yourself. Although it really works out good, because I really like having students in my class. And those of you that drop and come back next semester, yeah, I want to. You seem like a nice guy. We could be together 3 or 4 semesters. Yeah, I'd rather not, yeah. If we're together 3 or 4 semesters, let's make it different classes. Okay, anyway, good. All right, gang. How about this one down here? What happens as a result of this entry? It'd be different, wouldn't it? Well, yeah, if your adjusting entry is different, debit advertising expense, credit prepaid advertising, of course the impact on the statements is different, isn't it? So what would you have here? Revenues less expenses. What do you think, guys? Debit advertising expense, what does that do? Increase expense. What does that do? Reduce net income. What does that do? Reduce equity. What does a credit to prepaid advertising do? Decrease assets. Okay, that's it. If you fail to reduce the assets, what would be wrong with them? Overstated. Liabilities, if you did nothing to it, you should do nothing, no effect, right? Same with revenues. How about equity? Must be overstated, right? If you fail to do it. If you fail to make an entry you needed to, it'd be too high. You need to reduce it. Okay, how about expenses? Understated, which is what caused the net income to be overstated. This is easy, isn't it? Let yourself relax and do it. In this whole process, what's the hard thing? Knowing what they did in the first place, perhaps, and knowing what the adjusting entry is. But the adjusting entry is easy if you know what? where you want to be every time that's true. Okay? Where am I at? Where do I want to be? Make the adjusting entry. All right? Somebody want to read C for us? By the way, one other thing. On this one, this is a deferral of the expense, isn't it? The debit, prepaid, and credit cash, I deferred the expense. Even though the cash went out, I'm recording an asset, the prepaid, and that's going to defer the expense until later. So prepaids are deferred expense. Okay? Deferred asset. All right, gang. Who wants to do C?
C, John borrowed $300,000 at an 11% annual interest rate on April 1st of 2015 to expand its debt storage facility. The loan requires John to pay interest quarterly until the note is repaid in 3 years. John's paid quarterly interest on July 1st and October 1st.
So to record this in the first place, what would he have done? What did he borrow? Cash, right? And signed a note payable. So cash is a asset. You debit it, right? Increase it. Is it 300,000? And you credit what? Notes payable, the liability. We all know how to do this by now, right? We're good. Okay, what date was that? That was April 1st. And how long is this note for? 3 years. It's going to be a 3-year note payable. And what's the interest rate? 11%. Excellent. Okay. So how much interest is there every year? 300,000 times 11%? I guess. How much is that? $10% would be 30, right? 11% is 33, isn't it? $33,000. So the interest is going to be $33,000 a year. So what they've been doing all along is, what? Paying interest every 3 months, right? What's the year in for this company? November 30th. Okay. So when was the first interest payment paid? They even gave you the dates, didn't they? That's nice of them. They paid one July 1st, right? By the way, what do you think that entry would be? They're paying it. What do you want to credit? Cash. Excellent. How much are they paying? Quarterly. 1/4, right? What's 1/4 of 33,000? How much is it? 8,250. Right, guys? Divide 4 into 33,000. That's per quarter, right? Per 3 months. For 3 months. 1/4. All right. So how much cash are you going to be paying? 8,250, I guess, huh? Everybody agree with that? Okay. That won't be at November 30th. Come on, Keith. That will be on both dates. Or was it? July 1st, 3 months, right? Out. And then October 1st, another 3 months out. Everybody agree? It'd be those two, wouldn't it? Okay. All right. What would you debit? What am I paying? Interest. Let's call it interest. Because it's interest. Why am I getting an interest? Let's see. I borrowed the money. Maybe I bought a piece of equipment with it. Maybe I bought inventory with it, something, right? I'm using it to run my business. And I'm going to use that money then to generate what? Revenues. So the cost of borrowing the money is the interest. The cost I incurred to get my revenue. So it is interest what? Expense. Excellent. Got it. Debit interest expense. And they would have done that twice this year already. Am I right? They do it at July 1st and October 1st. And now it's November 30th. And what we got to think about is what happened between October and November 30th. How many months went by? 2 months. I have 2 months went by. Everybody agree with that? 2 months went by between the last payment, the month of October did and the month of November did, and my year end here at November 30th. So what do I have? I have 2 more months what? Interest expense. Every day that goes by, I have interest expense. Everybody agree? You ever borrow any money? Every day that goes by, you owe more because you have expense, right? You have more interest payable then, don't you? Because we're not going to pay this one. So how would you increase expenses? Still, debit interest expense. So here's our adjusting journal entry. For how many months though, guys? 2 months. So how much is that? That'd be the 33,000 times 2/12 or divided by 6, however you want to do it, right? 2 months over 12 months. Everybody agree? How much is that? How much? 5,500. Thank you. 5,500. Okay. It's 1/6 of 33,000. That sounds good. Okay. All right. So wouldn't interest expense be 5,500? That's kind of a tough one, isn't it? And credit what? If I paid him, it'd be cash, but I'm not paying him for another month, am I? So what is it, gang? Well, it wouldn't be accounts payable. It's interest payable, excellent. It's an accrued interest. Oh, that's an accrual. This is an accrual of interest expense. I haven't paid it yet, but I've accrued it. Okay? There's your adjusting journal entry. Debit interest expense, credit interest payable. You like it? Just for the number of months. What was the hard thing though? Not knowing debit interest expense, credit interest payable, that's pretty easy. What's the hard part? Getting the $5,500, right? What does it have to be? 2 months. Yes.
Where does the November part come in on the question?
At the beginning it says their year end in the very first sentence, or second sentence. Their year end, it just ended at November 30th, 2015. So they're not using December 31st, they're using November 30th as their year end. You have to, again, read carefully now, okay? So, makes this problem tougher, because we're used to December 31st year ends, aren't we? But companies can have their year end whenever they want, okay? Any day. Everybody good with that? Okay, so what would be the impact of this adjusting journal entry on the balance sheet and income statement? Here we go. So if I accrue this, what's going to happen? I don't know. If I accrue more expense, I have more expense, don't I? Didn't that increase expenses? Yes. Didn't that increase liabilities? Yes. What happened to assets? Nothing. What happened to equity? Must have also gone up. How'd that happen? Wait a minute. Liabilities went up, must have gone down. This must have gone down, right? Because this one, liabilities going up plus equity going down has to total 0 because assets didn't change. Okay? So if expenses go up and revenues don't change, no revenue in the journal entry, what happens to net income? Goes down. We're there. If I fail to do it, what's wrong? Nothing's wrong with assets. I would be understated on liabilities because I wouldn't have that liability recorded. I would be overstated on equity, right? Because I don't have the expense recorded. My revenues would be no effect. My expenses would be understated, which would have caused my net income to be overstated, which of course is what caused the equity to be overstated. Is your brain working this way now? Slowly, right? Getting there. Okay? So you can do them quickly. All right? What are we on? D? Somebody want to jump in on that one? Did you get that one yet? Did you do one? Yeah. Okay.
The Johnson family paid Johns $4,500 on November 1st, 2015 to store its sawbuck for the winter until May 1st, 2016. Johns credited 4 months unearned storage revenue on November 1st.
By the way, they credited unearned storage revenue, which is a, what kind of account of it? It's a deferral. It's a liability, yeah, right? Unearned revenue, deferred revenue is deferral of revenue, right? Liability. What other account could they have gone to if they wanted to? What's it going to be anyway once you earn it? Revenue. Could they have gone to a revenue account instead? Storage revenue? Sure. And if they had, it'd be a different adjusting entry, wouldn't it? But so they told you where they went with it. That's kind of nice. Okay, made it easier. So what did they receive, by the way? Cash. 4,500. And credit unearned storage revenue at liability. Good. What did they just do when they did this? Accrue or defer recognition of the revenue? They deferred it, they put it off, right? That's a deferral of revenue. Got it? That one's a deferral of revenue. Okay, so then for their adjusting journal entry, what are you going to want to do? Well, where are we right now, you guys? What do we have in unearned storage revenue? We have 4,500 in there, don't we? What date was that, by the way, that entry? November 1st, was it? Yeah. And what's their year end? So that came in November 1st. What's their year end? November 30th, right? Just a month later, right? And how long was that rental for? It was for the winter. Okay, 4,500, November 1st is for the winter. Oh, until May 1st, there it is. Okay, November 1st to May 1st. I was wondering how long winter was that. Okay, November 1st to May 1st. How many months is that? Is that 6 months, guys?
All of November?
Well, what happens in November? A 1 month went by and you stored it for them for that month, so what would you have? Revenue for 1 month. So I don't want that to be unearned revenue anymore. I want it to be what? Earned revenue. I want it to be in revenue.
And would you not count December since you're in November?
That's right. I don't mess with December at all. If their year end was in December, they would have earned 2 months, but their year end's November, right? So they've only earned 1. So all you do is you count from where you bought it to where year end is. That's it. So I've earned 1 month out of what? The 6 months? It's going to be 1/6, isn't it? What's it going to be, by the way, once I've earned it? What account am I going to put it in? It won't be unearned storage revenue, that liability anymore. What'll it be, guys? Storage revenue. Earned revenue, huh? You guys agree with that? So right now I've got none of it in storage revenue. I've got all of it in unearned storage revenue, and where would I rather be? How much have I earned of that? 4,500 divided by what? Whoops. 4,500 divided by what, guys? 6 months. You got it. I've earned 1/6 of it. What's that number? 750. So what account should be 750? Storage revenue. What should be an unearned storage revenue? The rest. It should be 5/6 of the 4,500, right? The rest. So how much is that going to be? 3,750. You could just take 5/6, right, times the 4,500 and get it, or you could just take the 750 away from the 4,500 and get it. That's it, isn't it? So how do I get from 0 in account up to 750, and how do I get down from 4,500 to 3,750? That's all we're doing here. How would you adjust storage revenue from 0 up to 750? Credit it for 750. See, the adjustments are easy, aren't they? It's knowing what the balance is supposed to be that's hard. Okay? Figuring out where you're at and where you want to be. Where you're at and where you want to be. That's the hard part. So I think my adjusting journal entry is going to be credit storage revenue for 750 and debit what for 750, everybody? Unearned storage revenue. And if you take 750 out of the 4,500, of course it's 3,750. Could you do that? And again, that was a deferral. They deferred it until they earned it later, right? Deferred recognition of the revenue until they earned it. Okay. So let's try it again. Here's the entry. Debit unearned revenue, what'll that do? Lower liabilities. Credit storage revenue, what'll that do? Increase revenues. Nothing else changed. That would cause net income to be more, which would cause equity to be more. If you fail to do this, no effect, no effect, understated, overstated, understated, whoops, overstated, overstated, which is what causes that overstatement over there. Nothing to this. Okay? Let's try another one. E, John used boat lifting equipment that cost $180,000, $18,000 was the depreciation for the year. So how is that gonna work? How does depreciation work? I've got equipment. With 180,000 in here. As I use it up, I don't reduce equipment, I increase accumulated depreciation. We did this last time, didn't we? Okay? I'm going to increase accumulated depreciation. This contra asset account represents what? The portion of the 180,000 I've used up. That's it, huh? So if this was my first year, right? If this is my first year, I'd want to have what in that account? 18,000, right? I want to have 18,000 reflected as used, and what'll I debit? The account that reflects I've used it up is of course an expense account because it's a cost I incurred to generate my revenues. So it's depreciation expense, isn't it? So I want this to have 18,000 in it. Right now it has nothing. What am I going to do? Credit accumulated depreciation by 18, debit depreciation expense by 18. Whoops, yeah. So depreciation expense debit. Debit for 18,000, credit accumulated depreciation for 18,000. This was actually a deferral of expense when they bought the equipment and put it into equipment. It's just like a prepaid, right? It's like prepaid rent. Equipment of a building. I'm going to use it later, right? Very simple. Okay. Let's try another one. Enough on the assets, over and under and all that stuff. Boat repair supplies on hand at December 1st totaled 18,900. So that's December 1st of last year. So here's repair supplies, which is an inventory. Okay, these are on hand. I'm not going to sell them. I'm going to use them repairing boats myself, but it's an asset. Okay, I got 18,900 at the beginning of the year. Here we go. So here's where I'm at. Repair supplies purchased and debited to supplies was 45,200. So what they did was they debited supplies and credited either accounts payable or cash. Here's my purchases, huh? So now how many do I have on hand? 18,900 plus 45,200 is how much? What's the total that's on hand then?
64,000.
64,100. Okay, that's what's available, right? Everything that's available, either I still have it at the end or I don't, right? What do they say? They say there's 15,600 on hand at the end. Well, wait a minute. If 15,600 is on hand at the end, that's what I want the ending balance to be on the balance sheet, right? Because that's what I have. How much don't I have? If there's 64,100 available and there's 15,600 left at the end, how many don't I have? What's 64,100 less 15,600? 48,500? 48,500? Everybody get that number? Somebody work it. Okay? All right? So what would the entry be for that? What does it become if I don't have it anymore? Repair supplies what, you guys? I bought the repair supplies to use them generating revenues when I repair boats. I've used them. What are they now? No longer inventory, they're now expense. Repair supplies expense. That's it. So I'm going to put the 48,500 in here. So my entry is debit, repair supplies inventory, or expense, I'm sorry. 48,500. There we go. And credit repair supplies inventory. I hope all these start seeming like they're exactly the same thing, because they are. We're just doing the same process over and over and over, just deferrals and accruals. On the last one, it's an easy one. Wages earned by employees November 2015 are unpaid and unrecorded at November 30th, 5,600. I'm not going to pay it till December. What would I do with that, gang? What do I have because they work for me? And I'm using their work to sell services to my customers, right? Everybody agree? They're doing the repairs on the boats, storing the boats. What would it be? Some sort of an expense? right? What kind of expense? Says wages, does it? How about wage expense? How do you increase expenses, all of them? With a debit. 5,600 is it? What would you credit for 5,600? It's not cash, I didn't pay it. What is it? I am accruing these wages. This is an accrual. I'm going to pay for them later, aren't I? Debit the expense, wage expense. Credit what? Wages payable, increasing the liability. Right? I increase the expense, reducing my net income, reducing my equity, and I increase my liability. Everybody good? Is this easy? After you learn from me. Really easy. Okay? See you next time. Study game. Why don't you guys stand in front of the mirror and practice saying, what is what? Owners invest, owners invest, they invest in the business. The company's investment in other companies. Owners invest in business.
When did you say the study session's gonna be? Wednesday?
4 to 6 Wednesday.
I don't think I'm gonna be there, 'cause we have baseball.
I'll record it though.
Put it on
And
there?
it'll be out there.
Alright, thank you.
Maybe get together with some other guys and
Okay.
laugh.